Hey everyone, this is Ryan Mallory, SharePunter.com. The market's gone crazy, man. FOMC statement yesterday, everybody was thinking that they'd start tapering some of that 85 billion that was being printed every month and start pulling back on that. I think there was a pretty strong consensus that would be the case going into today's announcement. However, they didn't do that. I don't know how long this is going to go on for, quite honestly. I mean, seriously, have we not been printing money basically since 2008 in some form, shape, form, or another? We got 0% interest rates, and I don't know how long this kind of nonsense can keep going forward with. Like I said yesterday, maybe there's some kind of loophole to capitalism that just the rest of us are too stupid to recognize, and that they can get away with some. They can defy mathematics and just continue to, and basic rules of economics, and continue to print money and get away with it. I don't know, but it is what it is. I mean, when we saw that market gap here over here in the left-hand corner, literally gapped intraday on the 5-minute chart, and we went from being at 702 in 1702 one moment to pushing all the way up. Just this is the 5-minute chart. Goes all the way straight within 5 minutes to 1718. That's a 16-point pop higher. I mean, as high as 1729. So within the span of about, I don't know, like less than an hour, basically. In about an hour, we go up 27 points. That, I can't remember the last time that happened. I'm not saying it hasn't happened. I know I've seen some pretty crazy rallies in such a short time span, especially to the downside. Oftentimes you don't get it to the upside nearly as often as you'll get the big, huge pushes downward. That's why they say it's like the market's taking the elevator or the escalator, stairs up, the elevator down. There you go. I got it right. But in this case, it was clearly the market took the elevator up today on this particular day. So I added one additional position to the portfolio yesterday. Bank of America is not doing too well. It's down about 3/4 of a point, or 3/4 of a percent. So it's not something that I'm worried about or losing. I mean, September's been fantastic so far for a month of trading. So I'm not complaining or anything like that. It just really hasn't done nothing. But then on the same note, the S&P is down 1/4 of a percent too. So it's not surprising to have some weakness in the portfolio today. I mean, I got FITB down 1%, OSK down 0.4 of a percent, EXXI, it's my baby these days. EXXI, after being up 6% at one point yesterday, it's up 0.4%. Baidu is up 1.25%, and then you got FTNT, which is just all over the map. It's basically trading flat, so it's not a bad day or anything like that. But the market's down. Not surprising after you pop 27 points in an hour to see a little bit of profit taking. Now, I haven't added any new positions today, and I've been a little bit tentative about doing that, for one, and we mentioned this yesterday as well. Since August, we have gone from, okay, so like August 28th, we opened the day at, or we had the lows of that day at 1627. Now look where we're at, 1722. So essentially, in like, let me pull up a calendar here and see how many trading days we're talking about. Essentially in 1, 2, 3 plus another 5, 8, 13, 14, 15, 16, 17 trading sessions. Okay, in 17 trading sessions, we have gone from 1627 to 1721. That's insane. And during that time, we've only had like 2 pullbacks. So 17 out of, well, if you count today, it would be like 14 out of 17 up days. Pretty impressive. Or you could ignore the first 3 days and say over the last 14 days, or last 13 days, not including today, we've been up 12 out of the last 13 days. So it's a little overextended, okay? I've seen the markets get like this. I thought yesterday was pretty overextended when not even looking at this bar. Now we're really overextended. We're at all-time highs. Now, like I said, a little nervous about adding additional long exposure. May just refrain from putting on any new trades today. But Look at this little resistance thing here going on. Okay, ignore all those other lines. There's a bunch of them. Look at that. Perfect. Perfect resistance here today. Okay, it's a slight upward trending trend line on the top of the price action, and it's causing the markets to pull back, and that's what we're having today. That's probably why we're, outside of the fact we're very overextended, this is causing your resistance. We tested it yesterday, couldn't break through it. We actually broke through it intraday yesterday and today, but we can't hold it. So there's some legitimate resistance in this market right now. And honestly, it's probably a good thing something's stopping the market in its tracks. We need to see a little bit of a consolidation. What would be really great if you could see some consolidation here between the 1729 highs and maybe like the 1720 lows for like the next, 3-4 days, maybe close it out tomorrow, a week, and then maybe go into Monday and Tuesday a little more consolidation, then boom, hit that, see a breakout of that consolidation, because then you'll work off a little bit of the overbought conditions. By the way, today I went down the street, grabbed some steak stack. They call it the Wrong Dug at Moe's, and they got free queso. Big old cup of free queso. And I don't know if you guys have ever been to Moe's, or if you have a Moe's in your neck of the woods. That queso is like currency for Moe's. I mean, you get some of that, I mean, it's the best liquid cheese you've ever had. But they give you a big old cup of it. I just thought I had to tell you that. And so I got my Moe's Mellow Yellow Zero to keep the calories off, of course. But sucking away at that this afternoon. All right, that was a little bit of a brain fart, so I'll keep on talking about more pertinent things like the stock market. So one of the things I thought we could probably do with this this little shindig that we're having here right now is just go over the long watch list and show you, this is the watch list that I published on Monday, and just show you why I'm having some apprehensions about getting long. Now, Triple D, I like this stock a lot this week. You have this huge consolidation pattern that's going on here. Let's see if I can draw it for you. Look at that. Boom. Okay. Dipped down below it a little bit. I thought about actually getting in this. I don't know if it was yesterday or the day before when it pulled back some. The problem, the stock, it's a fast-moving stock, which I like, but I like getting in fast-moving stocks that have a very tight stop loss. Now, some people are like, well, if it's a high beta stock, you want a tight stop loss. No, just because it's a high beta stock doesn't mean I want to lose more on it, okay? So if the stock is right, it'll obey the technical analysis. Whether it's a low beta or high beta, it doesn't matter. It should still follow my price thesis, so I want to keep a tight stop loss. This kind of stock, it's hard to find the right setup that doesn't require you to risk like 6-7% on the trade. For me, I don't want to go over 4%. Okay, it's just me. I know different strokes for different traders, but different strokes for different folks, right? I'm sort of destroying that saying. So Triple D, I liked it, but you could see here, I mean, it's gone. In the last 4 or 5 days, 49 to 55. That's over 10%. Overextended. Now, ANF, this was actually on our watch list today. I actually like this one, potential play here, but you can see it's starting to give back some of its gains after literally going nonstop this entire month minus 1 day from 34 and change up to 30, probably went up to 39, pretty close to 39. Okay, no go there. AYR, not a bad chart. It's sort of a funky chart. I haven't really talked about it much, but I do think there's some legitimacy if it can get above. If it can get above 1775. So that one's not really overextended. But then the fact that it's not overextended, this is sort of like the conundrum that us traders are in right now from a bullish standpoint. You want to get you like to get short because you can sort of see the resistance piling up, but then you start thinking to yourself, well, being short the last 5 years has not really worked, maybe except a handful of times. So you really want to avoid the short side because you're fighting the Fed. Like, it's basically like taking a water gun to a gunfight, a real gunfight, not another water gunfight. So you're fighting these odds of winning that are like next to nothing when you're trying to short this kind of a market. But then you want to get bullish, right? And then You say, okay, do I really want to get bullish after it's really moved up 100 plus points without even stopping hardly? Now we're getting a little bit of weakness today, and that's actually a good thing. But do you really want to get long at this point, especially when you should see that resistance that I laid out on the S&P just a few moments ago? See that here? So I talk about the easy money, and oftentimes you can't tell that you've made the easy money until after you've made the easy money, and because it shows up on the charts really well. Well, the easy money was if you got in at the beginning of September and rode this gravy train all the way up. Okay, that's the easy money. Back in late June, the easy money was if you got back in here at 1583 and rode it all the way up to late July, and then so if there's easy money, there's like not so easy money or difficult money to earn. Now, where the traders really earn their stripes or really earn their bucks is when they can make money in these kinds of markets. Okay, like for instance in the splash zone, we made a return trading to the long side in the month of August. Now, if you look at the chart on the month of August. August was down, folks. That's it right there. That little red bar with all the lines zigzagging through it. That is the month of August. And we still did good. I don't even think we did a single short in the month of August, maybe towards the tail end of it. But I think between the two short trades that we took either at the early August and beginning of September, we basically closed with just a slight profit between the two. One of them we were winners on, one of them we were losers on. Angie's List, I think we shorted. We made some good coin off of that, and we lost slightly less on shorting Monsanto. So the hard money is making it in this kind of a market here, where you're definitely not getting the free flow of capital inflow into the markets, whether it's the Fed's not juicing during that period or whatever, the New York Stock Exchange. So that's what we're dealing with there. So we've had the big run up. This is easy money here, okay? You can buy pretty much any stock that you want out there on the market and do well on it, okay? The difficult, the not so easy money is when we start getting these periods of consolidation or pullbacks and whatever. At this point, you got to say that we're probably going to enter into a period of maybe at least 2-3 weeks of not so easy money, okay? So that's just my thoughts on this whole thing. You don't have to necessarily agree with it all, but I think that a little bit of caution going forward doesn't mean that you need to change your tilt from bullish to bearish. It just needs to be a cautious bull. You don't want to get all, giddy like JoJo the Idiot Boy. You just want to play it cool here. So I'll probably not add any long positions. Play it a little bit safe today, and just see what. Okay, we're pulling back a little bit. Maybe we get a pop into the final hour where traders try to take advantage of even just a 3.5 point sell-off. Excuse me. And then I'll actually push it back. Wouldn't surprise me if that happened, okay? But then that gives me even more reason to be sort of cautious in this market, because you're starting to get a little bit of exuberant. What do they call that? What did Greenspan call that? Irrational exuberance. Is that the right one? So you start getting some of that exuberance in the market, and you don't really want to be loading yourself up to the gills in that scenario. Like right now, we got one short position plus 1, 2, 3, 4, 5, 6 long positions. There's one FTNT. I'm probably going to cut that sucker short before the end of the day. So there's probably going to be like 10% short, 50% long, like a net 40%, plus you got about 40% in cash standing by there. So that's really my take on this market here. Yeah, let's look at FTNT real quick, all right? And I won't take too much more of your time here, but worth discussing. All right, so you have this downward trend here, like a bull flag. We can go ahead and draw the bottom part of it just to illustrate it better. Okay, bull flag. It breaks it, consolidates nicely. I can't remember exactly when we got into it, but it was last week. And the stock has done jack squat. Everything looks good on it, but except for today. Now, yesterday when we got that huge pop, I started feeling a little bit better about it. We were emerging through this mess here, but then that candle, I really, really, really hate that candle. But how have we done really since beginning of September? Okay, let's just name and look at the beginning of September. let's just look at it from 910. We've been rallying since 910. This stock has not. All right, so while I got into it, I thought it would continue to push higher. It hasn't done that. So I might just have to go ahead and say, going to cut my losses on it. You know, I got plenty of winners in the portfolio right now. FTNT is not one of them. Now, talking about letting a winner run, Schlumberger, all right? And this stock got way up there, and it started looking like it might consolidate. I was like, you know, maybe I should get out and just take the gains, move on to the next trade. But I didn't get the feeling from this trade that this was one of those where you just want to be completely worried that it was going to give back all the gains. Oil's hot. I think it'll continue to be so, at least as while Syria remains an issue or until they resolve that matter. So you got a little bit of selling today. I'm not too worried about it, but the 10-day moving average is offering me a great way to manage the stop. I know that if it breaks below that 10-day moving average, I am out of here. Okay, so I'm just continuing to increase my stop loss on this trade. It's just steadily, you know, every couple of days or so when it merits it, and I think I've tightened it about 4 times now. So, but it's been a great trade, and that's what I want to keep these suckers around in my portfolio as long as I can, because they had just enormous. I think we're up like 8% on this trade, but they add enormous value to the overall position. So, all right, you know, I'm going to stop there. I've been rambling on for, you know, well over 15 minutes now, and you guys might already be tuning out anyways. If you guys have any questions, just hit me up, Ryan@sharepointer.com. I always answer all the emails. Sometimes I get caught up and, you know, behind on some of my work, you know, emails because I've got all sorts of stuff on my plate right now. So, but and then when I'm in the trading day, I'm not doing any of that. I don't do that stuff until nighttime. So trading day, I'm devoted totally entirely to trading. It's in the evening times where I try to get to my emails and everything. So give me a shout out if you guys have any questions. You can also follow me on Twitter @SharePlanner. Or if you're in this chat room, man, sign up for the SharePlanner Splash Zone. You'll like it. It's a 7-day free trial. Nothing to lose. And I'm in there directly every day with the subscribers, answering any and all questions that they might have. All right, folks. Y'all take care. God bless.